Hi, my name is Henry Jennings from Marcus Today, and as reporting season this week draws to a close, I just thought it'd be interesting to have a look at Monash IVF Group, their results this morning, which haven't been exactly spectacular to say the least. And as William Shakespeare once said, troubles come in battalions, and it looks like we've seen some more battalions of troubles coming for Monash IVF today. So let's just run through the numbers briefly. In terms of revenue growth of 6.7% to 271.9, underlying EBITDA growth 5.6% to 66.3, delivered underlying NPAT 27.4 million, which is down 8.1%, which is and was in line with the guidance that was provided back in May 2025. Part of the problem with Monash, of course, has been in the last few months the various issues they've had in some of their IVF clinics in terms of human error, as the inquiry pointed out only this week. Certainly some practices have been changed and they've implemented all the recommendations. So that is a tick in the box for the Monash guys. But unfortunately, the stock down around 18%. It had run up, I guess, to some extent a little bit too much ahead of these results. And we are seeing the domestic simulated cycles decreasing by 5%. In FY25 to a 1.7% decrease in the cycles last year. So there certainly is a bit of a slowdown in IVF procedures, that is for sure. The company also announced there would be no final dividend, although it does intend to resume dividends in FY26, assuming they achieve underlying NPAT guidance for FY26, which is going to be interesting, I guess, to see. They are looking at that NPAT between 20 and 23 million bucks for FY26, but we are seeing some headwinds there, certainly. And of course, we do have the board question as well, with the CEO resigning after the issues they had in Brisbane and elsewhere. So that is of an issue, and the company, I guess, at the moment is somewhat vulnerable given these numbers. So we have seen a temporary CEO in place, and certainly these numbers are not going to help shareholders' loyalty or optimism about the future. As I said, the stock is down around 18%, and the current acting group CEO talking about a challenging second half given the two adverse clinical events that were reported. And it commissioned that independent review, which came out on the 20th of August, just a few days ago. We do expect, he said, the FY26 to be impacted by continued industry weakness and potential impact from the incidents, which is something that they said would not occur. So a little bit of a change of tune there for Monash, but they are confident about Monash's IVF growth prospects beyond FY26, and they're expecting the industry to return to growth in Australia and Southeast Asia. And they are well positioned to capitalise on that, and they're looking to return to mid to high single-digit growth for Monash going forward. But certainly these numbers somewhat disappointing, and at 67 cents or wherever they currently are trading, it is not particularly good. Net debt increased as well by 40.9 million to 89.6, with the net debt to equity ratio of 35.7, net leverage of 1.7 times. But there is sufficient headroom available in all banking covenants. So that is something, I guess, but certainly not a good set of numbers. Certainly headwinds in the industry playing into that. And also, of course, the incidents that they had earlier this year are certainly turning some people off, I guess, the IVF process. And as a retail stock, in some respects, a very high-end retail stocks, it is probably suffering from high interest rates, etc., and housing affordability as well, playing into more and more people opting maybe to delay looking for raising children, etc. So not a great result. The market's certainly not taking it as a great result. Bear in mind that its biggest competitor is owned by private equity. So that is interesting in so much as that it could itself become a target at some stage. But certainly for today, it is not looking particularly good. And I would expect to see brokers who are still relatively optimistic on this one start to downgrade their numbers to reflect the new share price, and the price targets will follow the share price down. If you want to catch up with all the reporting season wrap, I'm hosting a webinar on September the 17th for everyone, and not just members of Marcus Today, but also anyone out there that is interested in a roundup of the reporting season. Some of the stocks, some of the themes, some of the ones that won, some of the ones that have lost over the last month or so. But certainly it's going to be an interesting take on reporting season, especially given the market is trading at pretty close to all-time highs. So we have had some good, we have had some bad, and by Jiminy, we have had some ugly. And I guess Monash IVF falls into that basket, certainly of bad bordering on ugly. Well, that's it. Thanks very much for paying attention and listening to this presentation. I will be back with more from reporting season in due course. But in the meantime, don't forget, this is general advice only, so please do your own research. Contact your own financial advisor regarding any of the thoughts, ideas, or insights in this presentation. Thanks again.